Welcome to Bloomberg ETF IQ. I'm Scarlett Fu. Katie Greifeld is off for the day. Let's get to the biggest stories right now in the more than $15 trillion global ETF industry. President Trump plans to slap 25% tariffs on all imports of steel and aluminum into the U.S., widening his trade restrictions to some of the country's top trading partners. As gold climbs to a new record on the back of the tariff news, we speak to Matt Tuttle on his new ETF that doubles down on precious metals and crypto. And Trump Media expands its reach to ETFs as it gets ready to sell funds that track the president's priorities while in office. But first, as always, we want to bring in Eric Balchunas from Bloomberg Intelligence, a little under the weather because he's still celebrating his team's victory yesterday. Eric, what do you have?
Scarlett, thank you. Yeah, this is a good kind of tired. I'm really excited. It was a great win last night. Let's look at the flows here. You got SPY at the top. This is interesting. SPY had been, seeing a lot of outflows from tax loss harvesting. When you see SPY flows, it tells you like that trader crowd is interested in the market. VU is the Vanguard bid. That's the buy and hold. So to see those two at the top is pretty good. Then you've got some treasuries here, but then you got Dow and the Qs. So I think DIA, QQQ, and the SPY, these are these old dog liquidity ETFs that the trader crowd likes. So they're coming back into the market. But again, some people buying treasuries still. So a little mixed, but mostly bullish. Let's look at the outflows here. And you're going to see here that TLT is the top. So again, outflows from TLTs, I think, generally bullish. Then we've got outflows from small caps. Again, they can't ever get going. But generally, last week, we told you about the weather, looking at the volume in ETFs and how it was light after both the deep Seek sell-off and the tariff sell-off. And I was like, the volume points to a rebound. And we saw it in both the flows and the price. Now, let's go over here and look at the trading crowd versus the buy and hold retail crowd. Because, again, this is a good sentiment indicator here. These are ETFs. The yellow is ETFs used by traders, right? SPY, the Qs. This is ETFs used by buy and hold, Vanguard, the iShares Core Series. So this one's very volatile. And look, the yellow bar has been almost outflows since the beginning of the year. The only money coming in has been the Vanguard bid, which is pretty relentless. So the yellow to come back is a good sign because it tells you, Scarlett, that the trading crowd, which gets spooked easily, is okay. Maybe they're not afraid of the tariffs anymore. So a pretty good sign. It's early, though.
It is early, and of course, it could change on a dime. All right, Eric, thanks so much for that. Joining us now with our continuing conversation is Jane Edmondson. She is head of index product strategy at TMX VettaFi. Jane, welcome to ETF IQ. We had the DeepSeek shock about 2 weeks ago, and of course, rolling tariff announcements since then. It's triggered a bit of rotation within stocks as well as out of stocks. When investors exit something like big tech or certain sectors and then flock to havens, how much of what happens next shows up in flows?
Well, it's interesting. Eric was mentioning about S&P 500 flows. Up until recently, all those flows have been going into VOO, the Vanguard S&P 500. So, it is kind of interesting to see now we're getting some trading money in there. But, certainly we're in a risk-on environment. So we're starting to get those flows into equities. And we're kind of reached another milestone. Last week, there's now over 4,000 ETFs out there with 70 new launches so far this year. And that follows, obviously, last year when we had more than $1 trillion in inflows with 747 launches and 190 fund closures. So ETFs have definitely gone mainstream. But what's interesting is that the types of ETF products that are coming to market are inflating those
Right.
new issuance numbers, like the defined income buffer products, single stocks, and then some of these active ETF issues as well.
Yeah, and I find there's some old heads like myself, although I'm pretty liberal. A lot of people are getting a little upset by all the crazy new products, the hot sauce type launches we see. My take is, look, people are going to degen out anyway, whether it's like sports gambling or stocks or options. Like, it's legal. I'm okay with it. And it's pretty niche. But what do you think? Is there a danger here to sort of putting out a lot of these sort of leveraged or really highly volatile ETFs?
Yeah, and there's been a lot of them, right? These levered single stock ETFs. And one of the advantages of the ETF structure, right, is diversification. And this, defies, that logic, but does give investors exposure to some of these companies that they want to have exposure to. Last year's darling, of course, was NVIDIA. This year, it seems to be Palantir, with both Granite Shares and Direction having 2x versions of Palantir, and there's a Leverage Shares has a 3x version. So, leverage is kind of the secret sauce of the day, and it works very well. Obviously, if you're in a 2x long strategy and the stock's going up, it's great. But I think, to your point, investors aren't necessarily dialed into some of the risk associated with it, the negative carry, and that can result in not actually tracking the underlying investment. So, but there's certainly an appetite for it. And from an issuer standpoint, the fees are much better on these products. We're in a situation right now where Vanguard obviously just cut their fees on a lot of their products. So, innovation is the path to higher fees.
Absolutely. I want to touch on that idea that Vanguard is cutting fees to just an average of 7 basis points. We saw BlackRock, Invesco, and State Street shares tumble following that news. Is it a given that these Vanguard peers, will need to follow suit with their own reduction in fees, at least on their passive products?
Yeah, I think that's very much the case. Fee compression is real, which is why I think we're seeing this proliferation of new innovative products, because, issuers are looking for places where they can still, they're going to concede the core space with a lot of the core products, but they'll make, higher fees in some of these more innovative areas, like the levered products that we were talking about. And then even, something like one of the top ETFs this year from a performance standpoint is psychedelics. So that's an example of a thematic that kind of is getting traction, is sort of a Trump trade right now. Investors want exposure to that because there seems to be some advocacy for psychedelic drugs used for treatments for mental health, and both RFK and Elon are proponents of that. So, that's an example of a product that's been kind of resurrected in this environment. But thematics in general, obviously, still garner higher fees than some of these core products.
And now, one of the things that you're watching that I am too, I call it the VU watch. We're about to see a second empire fall. We saw the Chiefs fall last night. Now we're about to see
Congratulations, Eric.
I know, thank you. It was great. We could see 2 empires fall within 24 hours. It's in the air, I guess. Anyway, VU is going to pass SPY in assets probably tonight or tomorrow. And I don't think it's going to look back. I think it's going to be the biggest ETF for decades. But SPY will still have more volume for many years. Do you foresee a world where VU actually passes SPY in volume down the road and just becomes like this sort of, center of the ETF universe?
Yeah, it's interesting. SPY was the first ETF, right? Back in, was it 1993? So, if it loses the crown, I think that's a big deal. But, Vanguard has been very good at capturing. You've written about this yourself, Eric. They've been very good at capturing that investment opportunity with lower cost, high quality products. So it's going to be neck and neck, but it's definitely, there's a race out there in this sort of race to zero, I guess, from a fee perspective.
Yeah. I think we're going to have to do a special ETF show when VU overtakes SPY. I kind of see that in our future, Eric.
Well, it might be tomorrow, and I need rest.
Okay, all right, so we'll wait until Wednesday. Done. All right, Jane, we talked about how innovation is the path to higher fees. Actively managed funds obviously have a high track record of consistent, let me rephrase. Actively managed funds that do have a track record of strong returns, consistent returns, have that pricing power. What's the highest expense ratio that investors are willing to tolerate? Is there a ceiling?
It seems to be there's sort of that 1% level seems to be the magic level, and beyond that, and maybe that goes back to, sort of institutional investing, what some of the institutional mutual funds and things charged. So there seems to be that 1% threshold. But you look at these levered products, they're all at that level. So investors seem to be willing to pay the higher fees if there's value associated with it. And certainly you could make the case maybe with some of those active products that, there is more alpha opportunity. So, the higher fees are justified, as opposed to passive products. But we'll see. I think more realistically, probably that, 50, 60 basis point threshold seems to be where prices are landing. But again, it depends on how innovative and what kind of alpha generation opportunity there is in the product itself.
how bright and shiny they end up being. All right, Jane, really appreciate you joining us today. Jane Edmondson of TMX VettaFi. Coming up on ETF IQ, Trump Media makes its push into ETFs. We're going to discuss this extraordinary move for the president's company next. And here's what Vanguard CEO Salim Ramji said about his record-breaking fee cut that we just mentioned when Katie Greifeld spoke with him last week. Take a listen.
Active management at a low fee can really outperform over the long term if delivered with the right quality.
Welcome back to Bloomberg ETF IQ. I'm Scarlett Fu. It's time now for the ETF Brief, where we highlight stories and trends that caught my eye. And we start with President Trump's latest tariff plans. He says he intends to impose a 25% tariff on all aluminum and steel imports. No word on timing, but here's a snapshot of ETFs that would be affected. You can see bigger gains, at least 3% gains in ETFs that track steel or metals and mining. But the basic materials ETF, the iShares one, IYM, only up 0.8% because iron and steel companies make up about 11% of that fund. Next, with the Fed no longer in rate-cutting mode, investors are seeking exposure to floating rates. So they are putting money into funds tracking collateralized loan obligations, starting with the biggest. This is the Janus Henderson AAA CLO ETF. Ticker JAAA has added almost $4 billion year to date, boosting its assets overall to north of $20 billion. And according to Nomura, there is a lot more to come. It estimates inflows of $25 billion into AAA-rated CLO funds this year. And let's end things on Trump Media, which applied to trademark brands for 6 investment products with America First themes. These, of course, include ETFs, and here are the names: TruthFi Made in America ETF, TruthFi U.S. Energy Independence ETF, and TruthFi Bitcoin Plus ETF. So Eric Balchunas is here with me on set. Just because there's a filing doesn't actually mean there's going to be an ETF launched, right? I mean, it's like a placeholder.
Yeah, these aren't even filed yet.
These aren't even filed yet. Okay.
They're just trademarked. But usually there's a process. You trademark them, you file them, and they get approved. These look pretty vanilla. So unless there's some issue with the conflict of interest of Trump being majority owner of this company, but the thing, he's president. So
and
this
who
is
approves
also,
these ETFs?
What's that?
Who approves these ETFs? The SEC, right?
That's what I'm saying. His somebody who works for him. So,
yeah.
So let's just assume they all get filed. They would come out pretty orderly. So we could have these on the market in 2 or 3 months.
You said they're pretty vanilla, so that means the bar to doing something similar by someone else is pretty low. So do you see the big ETF issuers like, I don't know, Vanguard, State Street, Invesco, following suit with their own version? Of course, BlackRock too, we can't forget them. Following suit with their own version of these kinds of funds?
Well, what's interesting is BlackRock came out with basically a manufacturing ETF called MADE, which flicks to Made in America. So they already have these ETFs, which is part of what I wrote, which is that this is a sign of how wild ETFs are going to get this year. But at the end of the day, a lot of the big issuers have an energy ETF. They have a Made in America type ETF, and they have Bitcoin ETFs for dirt cheap and liquid. So that's the thing. Like, this will get a lot of headlines, but even Trump's name or the TruthFi name, it's going to struggle against cheap and liquid. Cheap and liquid is just really tough. That said,
that's a behemoth, yeah.
Strive, which is Vivek's ETFs, which when he was appointed at that time to run Doge or whatever, I thought that was crazy. I'm like, wow, somebody in the government, and this is a whole new level of like governmental ETF usage here. But that's sort of, I think, where you'll find some, assets. Strive has like $4 billion, so they might have a little niche. But I see these getting a lot more media attention than assets.
Can Trump Media or TruthFi turn these passive funds into active funds and therefore charge higher fees?
I guess. I mean, again, like an active energy ETF. Here's the thing: like if you have a strong following, you can get some assets because people are like, I just like Trump's brand. Like maybe they use Truth Social and they're just into the whole thing. It's almost like remember Trump Steaks and that whole thing. This is kind of like that. It's just like let's just put out products for everything. Yes, absolutely. And the thing is, like, if you are a company that wants to do financial products, ETFs are kind of where it's at. It's like the Spotify. So it makes sense they're putting what they're putting in the ETF wrapper. It's just, I think, a sign of the times in terms of now we're on pace to have 1,000 ETFs launched this year. And Gone are the vanilla ones because that's all had by Vanguard.
Yeah.
So you're going to have like just all kinds of interesting experimentations this year, including, TruthFi's ETFs.
So you mentioned that they've only done the filing for trademark. What's the timeline then for these funds actually trading?
Yeah.
Are we talking like 3 months or 6 months?
More like 3.
Okay.
Yeah, it's
So
pretty easy.
quickly.
And when you file something like this, the SEC doesn't have to really approve it. They just don't do anything and you can launch. So, those 33 Act ones we paid attention to with the Bitcoin, those are a whole different ball of wax because of 19B4s and exchanges. That takes 270 days. These are more, vanilla. Yeah, straightforward. So look for these in March, April.
All right, we've got a lot more coming up on ETF IQ. We're going to talk to Matt Tuttle on his newly launched crypto and precious metals ETF next. This is ETF IQ on Bloomberg. This is Bloomberg ETF IQ. I'm Scarlett Fu. Eric Balchunas from Bloomberg Intelligence back with us now with today's drill down where we focus on one ETF. Eric, what do we have?
Scarlett, today we are looking at BEGS, which is the Rareview 2X Bull Cryptocurrency and Precious Metals ETF. Okay, what's going on here? Look at the ticker. The ticker helped me remember this easily. It's Bitcoin, 75%, Ether, 25%, gold, 75%, silver, 25%. So that's 200% total. More in gold and Bitcoin and a little less in Ether and silver. This is this sort of return stack concept. So it's leveraged, but it gives you 4 things in one shot. It just came out, obviously leverage up here. It's about 1%, very new, no assets really, but again, just on the market now. We're seeing a lot of these types of products. In fact, 2 weeks ago, we had the Bitcoin plus gold ETF. This one takes that to a different level. Let's look at the holdings here. And the way you get holding, this exposure is through swaps, which are basically, kind of bar bets with Wall Street banks that issue these swaps every day. And that's how they get the exposure. Let's look at the performance of these 4 things. If you look, you've got Bitcoin, I got Ether, gold, and silver. So that's what it holds. And you see them the past 6 months, these are all up. So the thing with this ETF is you actually kind of add these together to a degree, okay? You basically get to do some addition here, and that's nice. On the flip side, Scarlett, if they go down, you got to do a lot of subtraction. So these are, again, hot sauce products, but there is definitely a market for stuff like this.
Yeah, well, for now, it is all addition. So, Eric, thank you so much for that. And joining us now to talk about this ETF is Matt Tuttle. He is CEO and CIO of Tuttle Capital Management. Matt, why now? Why launch this product now?
So I think you've got a lot of stuff going on where you want to have crypto and precious metals in your portfolio. So I think on the crypto side, IBIT was a game changer. It made crypto available to everybody. And now we're entering what I think is a golden age of crypto. You've got a president who's pro-crypto. You've got a crypto czar. I don't know what that is, but if I'm a crypto bull, that's got to be good.
Sounds good.
Yeah, you've got an SEC that's pro-crypto. I mean, the Eric Balchunas meme coin has got to be out like any day now, I would assume. So, I think that crypto is something you want to have in your portfolio. Precious metals, somewhat of the same type of trade, but where I really like it is when you've got inflation, which I don't think we've tamed that. And also, one of the big themes we're looking at this year is the Fed being clueless. And you add that to trying to figure out Trump and what he's going to do with tariffs, good luck with that. So I think that's all going to be a mess. I think people are going to want to go into precious metals, and you've seen that with gold, specifically this year.
I have found the gold camp and the Bitcoin camp are just 2 different camps. Very rare do you have a crossover person who's likes both. How do you sell this? Usually people pick one or the other. Like, are you trying to explain to Bitcoin people you should have gold, or to gold people you should have Bitcoin, or what's going on here?
So really almost neither. So, we've got the 2X trading products. If you want to trade crypto, we have 2X long Bitcoin. We have 2X long Ether. To me, this is more of kind of the return stacked buy and hold type of product where you want to have this in your portfolio. You want to have crypto, obviously Bitcoin being the more mature. You want to have precious metals with an emphasis on gold. So I look at this as a totally different marketplace.
Where's the demand coming from for this product? Is it from the institutional side? Is it from the retail side? And if it's from the retail side, are we talking about people Eric's age, the Gen X crowd, or are we talking more Gen Z?
So, I think probably we're talking the older people, my age, I'm older than Eric, where, for me, I would never set up a Coinbase account or something to trade crypto. That's totally off my radar screen. But buy an ETF, I'll do that all day, every day. And I think it's more for those people who say, all right, I want crypto in my portfolio, but I don't know what a cold wallet is. I don't want to memorize. I don't want to know any of those things. Just, give me an ETF. I'm used to that.
Okay, I'm going to say a lot of stuff. I just want you to comment. I know some of you can't comment on. You filed for a 2x Trump ETF, a 2x Melania ETF, a 2x Bonk ETF, a 2x Polka.
ETF?
Yeah. I had to Google some of this, by the way. It's rare. Once a year I have to Google something. This was the filing. Anyway, some of these aren't even in ETF format yet. And these are 40 Act. So they could theoretically be out in like 2 months. Will they get out, do you think? And the second thing is, how's this interesting thing where you file for a Trump ETF and the SEC has to go, okay, well, this is not really safe for retail. Then you're judging your boss's meme coin. How's that going to play out?
So I think it's going to play out pretty well. You've got an SEC that, if I had tried to file these a couple years ago, we would have gotten a call in 5 minutes saying, take them out. So, I think that's a possibility. What's going to launch, when it's going to launch, if it's going to be able to launch, who knows? But again, like I said before, I think we've got this golden age of crypto. And we just said, all right, what are the highest market cap? Let's be out there and ready.
If we're talking about a golden age of crypto, that suggests buying and holding. Are these products, this one, BEGS, is this a buy and hold product?
This is a buy and hold product. I would not look at a 2x Trump coin as a buy and hold product.
All right, Matt Tuttle of Capital Management, really appreciate your joining us. What else? What other corners of the ETF world are you looking at?
Oh, I got some fun stuff coming out.
He's got a UFO disclosure ETF. We just don't have time, but just think about that phrase.
I know that. Okay, we're gonna have to have you back on to talk about that.
Reverse alien technology engineering.
Yes.
That's the next drill down.
All right. Thank you so much, Matt Tuttle.
Thank
Matt
you.
Tuttle is CEO and CIO of Tuttle Capital Management. And just a quick programming note, because of the President's Day holiday on Monday, we will be back on Wednesday, February 19th. So one of those rare weeks when ETF IQ is on Wednesday. By the way, you can read about this drill down plus the latest in the ETF industry when you subscribe to Katie's weekly ETF IQ newsletter. You also have a podcast, right?
Trillions.
Trillions.
Yeah.
With
Going
you
strong.
and
It's
Joel
like
Weber.
been 10 years.
Really?
Yeah. I know, time flies, doesn't
A
it?
decade-long podcast?
I know. You've been on it a couple times.
I know, but you're one of the first 10 years. I can't believe that.
I know.
All right, that does it for Bloomberg ETF IQ. I'm Scarlett Fu. You are?
Eric Balchunas.
There we go. And this is Bloomberg.